Welcome to the 2014 results presentation of SQS. My name is Dik Vos, CEO of SQS. SQS provides software testing services along the full software cycle in large industry environments, like throughout banking, insurance, but also retail and logistics, manufacturing, and the telecommunications environment. SQS was founded over 30 years ago, and we could really say with proudness, testing is in our genes. 2014, we delivered on all the key metrics, not only on our growth, on our profitability, but especially on our cash position. Growth was up 19%, our adjusted PBT up to 52%, but our net cash position of 9.8 million was a formidable performance. Also, we have further transitioned our business model, where we now deliver 45% of our total business from managed services. SQS, as the world's largest independent software testing and QA provider, provides the services and has the leading portfolio along the full software cycle. For large enterprise clients, this is a mandatory spend, not a discretionary. The performance of 2014 had a very strong effect on our business. Our focus is really to look at managed services, further expansion of US markets, and our core verticals. Our managed services revenues in 2014 are now up to 45%, up from 41%, which means that we have a much larger order backlog and visibility of our business. We are far more innovative and provide technology and reusable assets in our delivery centers, as well as our very strong onshore and culturally fit environment. We improved our gross margins by making sure that we have an industrialization process rolled out across the group. The two acquisitions we did have enlarged not only our geographical footprint, which is a key part of our strategy, with the BitMedia acquisition, soon to be renamed SQS Italia SPA, we have now also presence in the very large Italian market, the 8th largest world economy market. SQS BFSI India has been fully integrated. If we look at especially the US and the UK, the delivery as well as the sales side have been fully integrated. So if we look further at this year, 2015, we'll be looking at further expanding not only our test automation but also the output-based pricing. We'll further look at strong organic growth in Europe across all countries, including Italy. We will further strengthen our position in the US market. At the end, 50% of the world addressable market is in the US. And we will focus on BFSI, retail and logistics, and the manufacturing verticals, so the core 3 out of all 6. With that, I will now hand over to René Gawron, our CFO, who will take you through further financial details.
Hello, my name is René Gawron and I'm the CFO of SQS, and I'm happy to take you through the financial section of our 2014 presentation. This year we will be listed on AIM since 10 years. We listed in 2005, and before I go into our numbers, sometimes it makes sense to remind us all we've grown from being roughly a 50 million euro revenue company to close to 270 million over those past 10 years. 2014, I think we have improved on all the key metrics, as Dik already mentioned in his summary. The 19% revenue growth we've seen was also very much helped by the successful contribution from SQS India BFSI. We're very happy that this acquisition so far has been a very successful one and had a strong contribution of more than half of that growth to the top line, but also made a substantial contribution to the improvement of the bottom line. On earnings per share, we have seen a 43% increase, and we are very happy to announce that we will propose a 13 euro cents per share dividend to the AGM, which is up from 9 cents the year before, because we've always followed our dividend policy to roughly pay out about 30% of our profit after taxes to shareholders. If we take a look at the major business lines that have helped us to improve bottom line and top line, let's start with managed services. As you know, since now a number of reporting periods, this has been our largest segment. And with 45% of total revenues, managed services is all about long-term deals. Very often these deals are about 3 years long. They give us better visibility, and they also give us the best gross margin of all our business lines. The gross margin has moved up to almost 37%, up from 34.2% the previous year. The reason why the gross margin improves is because we do have better utilization, because we have better visibility on those kind of deals. We do deliver a much higher share of those revenues from test centers. And the third aspect is we do deliver those revenues in a much more industrialized way with kind of first elements of things like test automation. We have invested a lot, as you may know, into our assets, into our methodology, and with the margin improvements we see in managed services, this is kind of delivering evidence that these investments actually help us to improve our gross margins. The other two segments, specialist consultancy and regular testing services, are both entry segments into new client engagements. All these deals start small in our business, so you need to start on a kind of project by project to hopefully develop some of those deals into larger managed services deals throughout their life cycle. Specialist consultancy is a more attractive segment as it delivers higher gross margins, and regular testing services is a line of business we're seeking to reduce over the next 2 to 3 years to contribute something around like 30% of total revenues. Since a number of years, we continue to deploy our strategy, and the strategy is all about improving the gross margins, and this is evidenced over all the past reporting periods. Gross margins have gone up continuously and very much driven by the increasing share of managed services and their improved gross margins. We've also reduced and continue to reduce the number of clients per year, but on the other hand, very much increase the average revenue per client. Why do we want to decrease the number of clients? It is because it saves on our overheads, and it is a focus on more longer term deals, which typically are also larger deals. And finally, we've produced a net cash position after a number of years of investment, which was a drag on our cash position, especially when we started going into managed services. And we are now back to a very much a normalized and full EBITDA to operating cash conversion. So this is the first year since a number of reporting periods where we have produced a net cash position at the year end. I'd also like to remind investors there is a certain seasonality in our business, which typically leads to a lower net cash position at the end of the first half of the year and to a much better net cash position at the end of a full fiscal year. When we look at the 2014 split by industries, we see there has been a strong increase in banking and financial services. The strong increase to now 38% is due to the first-time consolidation of SQS India BFSI, and the name already says it. SQS India BFSI is totally focused on financial services and the insurance domain. The other domain which has really grown quite nicely, also with about 20% growth year on year, has been manufacturing. You may recall the growth we've seen in the United States is very much driven by manufacturing clients and testing their enterprise systems. Taking a look at the geographies, it's also worthwhile sometimes to take a look back where we have been 10 years ago. 10 years ago, Germany, where the company was founded, was more than 2/3 of our revenue. This has come down, at least in relative terms, because we've grown and developed businesses in many other geographies. We're quite proud to say, after historically we've always had a very strong footprint in the European regional markets, that now our non-European revenue accounts for more than 10% of our business for the first time.
Let me now take you through the markets and the outlook for 2015 for SQS. In 2005, 70% of our business was in Germany. As René presented, if you look at now where we are globally, we are really globally present in the two core markets. EMEA represents 40% of the addressable market and the US 50%. If we look at the growth of testing services in our market, and this is a Nelson Hall study, we can see that the market still outpaces by and large the general IT market. Market growth numbers in the US are very high, looking at around 14%, but that is of course the overall spend in this business. I think a 7 to 10% is reasonable to assume what is independently contracted to companies like ours. So in all, we are in a market that is still growing extremely fast globally. SQS has really performed very well on all key metrics. And I'm very proud that also we have moved up from position 11 globally to now position number 10 against all larger system integrators. And that we have now taken over the position from HP in this market. If you look at the independent software testing companies, you can see that SQS is really the world's largest independent software testing company. So if we look back a little bit on what was our strategy, which we set out in 2012, what have we delivered and where does it take us further? We were really shaping and driving the most challenging business software change initiatives. That's what we do in the more than 300 larger clients we have. We have significantly increased the share of wallet per client, which was presented earlier on, to meet our target of a deal size of $1.5 million per year. We've expanded in the US, and we will look at making further acquisitions. But I think it's very important to realize that we are continuing to win market share. We have improved already significantly our gross margin. Our objective was 4% by 2017. So far we've delivered 3%. But also we wanted to start our presence in Asia Pacific. At the end, around 10 to 12% of the world addressable market is in that area. Through the acquisition of ThinkSoft, we are now in the Middle East and we are in Asia Pacific. And we really can say that we have a global delivery. So I believe on the strategy we set out, we consistently deliver. So let us now look at the outlook of 2015. We will look forward to the current year with cautious optimism. We will continue focus on managed services, higher margin business, continue to build our industrialization, domain-based testing, reusable assets, but also we will focus really on the 3 core industries out of the 6. I would like to thank you all for listening to the presentation, and I look forward to updating you on our further results in 6 months' time.